Hi, my name is Nick Taylor. Thanks again for watching this video. Wanted to do a topic today that's fun for me to talk about. I love talking about how to use a lender and their money. Save you money, basically. Number one, balance your money with theirs. It's always important to put down money because it's usually obviously a requirement when you qualify for a refinance or a purchase, but sometimes it doesn't always become greatly beneficial when you put down money, extra money, out of your bank account, like $10,000 as an example, sometimes only equates to a monthly savings of like $100. Sometimes it's better to have, and usually it's better to have that extra 10 grand in the bank account for a rainy day. Doesn't mean also too that 10 grand you saved, you can add it later to the principal. So number two, life of the loan. A 30-year fix is always a great conventional loan type, but there are other types of loans out there that are very helpful that will free up more money monthly that you can make towards the principal balance if you have a lower interest rate and you have a lower monthly payment. Now, you will have to refinance, but if you have equity, you'll have the ability to refinance, and that's number three. The more equity you have will give you the ability to refinance and usually equals a shorter loan term. So if you're making your equity a priority, it'll give you refinance options, and instead of just waiting for a 30-year fix to come due, you can refinance out of it and continue to get the monthly payments down lower, your balance lower, and pay off the house quicker. So that's pretty much it. Thanks so much for watching. Appreciate it. Have a great day, and let me know if you have any questions. Thanks for watching. Bye.